Hello and welcome to AI Market News by LM. All right, let's get right into it. The market is absolutely holding its breath today, and it's all because of one giant question. Oil prices have shot past $100 a barrel, so is the US economy about to be pushed right over the edge into a recession? We're gonna break it all down. So let's talk about the number that has literally everyone on edge right now, $100. Yep, Brent crude is trading above that critical mark. And this isn't happening in a vacuum. It's a direct result of some serious geopolitical tensions. You know, it's easy to see it as just a number on a screen, but believe me, this is creating some very, very real pressure that we're seeing ripple all across the globe. And all that pressure, well, it brings us right back to the central question we're tackling today. Is the US economy actually headed for a recession? Because when you combine this kind of oil shock with some of the other worrying signals we've been seeing, that fear is suddenly front and center for everybody, from Wall Street traders all the way down to Main Street. Okay, so how in the world did we get here? Let's dig into the geopolitical mess that's sending these shockwaves through the energy markets. So the real heart of the issue is an ongoing conflict that's basically shut down a super critical choke point for global energy. We're talking about the Strait of Hormuz. I mean, this one supply disruption is pretty much the main reason Brent crude shot over that $100 mark. And we are all feeling it at the pump. US diesel prices are now over $5 a gallon, a level we haven't had to deal with since back in late 2022. Now, as you can imagine, this whole energy crisis puts the US Federal Reserve in a really, really tough spot. It's like they're being forced to fight a war on two fronts at the same time. And this is the massive dilemma the Fed is staring down right now. On one side, you've got the inflation threat, right? These soaring energy costs are just pouring fuel on the fire, giving us the biggest jump in inflation since that really painful period back in 2021 and 2022. But on the other side, there's a huge growth risk. The latest unemployment data, it was weak. It kind of suggests the economy is already slowing down. So if the Fed jacks up rates to fight inflation, they could completely kill the economy in the process. You know, there's this line from some recent market commentary that just hits the nail on the head. It says, traders can see this dilemma that the Federal Reserve has. They're really between a rock and a hard place. And that's exactly it. Traders get it. There are just no easy choices here, and pretty much any move the Fed makes is loaded with risk. So, all of this, it leads us to the main event, the big one for today, the Federal Reserve's interest rate decision. So what should we be expecting? Well, if we take a peek at the CME FedWatch tool, that's the one that tracks what the market is betting on, the verdict is pretty much in. There is a, get this, 98.9% chance that the Fed does nothing, that they hold rates steady. A rate hike? Forget about it. It's almost completely off the table. So the key thing for us to remember is that the decision itself isn't going to be the big surprise today. Exactly. The market has completely priced in a hold at 3.75%. So what everyone is really waiting for isn't what they do, it's what they say. It's all about the message. The market is going to be hanging on every single word from the FOMC and especially from Fed Chair Powell's press conference later. We're all just searching for clues, any hint about how they see this whole mess and what their game plan might be for the next few months. Okay, so with all this uncertainty just hanging in the air, how are the markets actually reacting to all of this? Let's take a look as we head into this huge decision. Over in the currency markets, we are seeing a classic flight to safety. What that means is when people get nervous, they buy US dollars. And this chart of the US dollar against the Japanese yen is a perfect example. The dollar is still super strong, trading just shy of that 159 level. It's a textbook move. When there's global stress, money pours into the dollar because it's seen as safe. And that's exactly what's happening right now. If we zoom out and look at the broader market, it's a bit of a mixed bag. Crude oil is actually down a little bit, and the euro is a bit weaker against that super strong dollar. But here's the interesting part. Even with all this tension, US stock futures are actually pointing up. Both the S&P 500 and the NASDAQ 100 are showing, I guess you could call it some cautious optimism heading into the day. You know, to really get a feel for the market's mood, we can look at something called the Fear and Greed Index. It's exactly what it sounds like. It's like an emotional thermometer for the market. It mashes together 7 different indicators, stuff like market momentum and volatility, to figure out if investors are mostly scared, which drives stocks down, or if they're greedy, which drives them up. It's a really neat tool for trying to understand the psychology behind all these numbers. All right, keeping all that in mind, let's look at the calendar and see what the timeline is for today because it's all building up to that big Fed announcement. Okay, looking at today's economic calendar, and we're pulling this from investing.com, it is a packed day. Things kick off at 8:30 a.m. Eastern Time with some key inflation data, the PPI report. Then at 10:30, we get the crude oil inventories report, which is super important for supply. And then the main event. At 2 p.m., we get the Fed's decision. And just 30 minutes later, at 2:30, the press conference begins. Trust me, that half-hour window, that's when things could get really wild. So what's the big takeaway from all this? Well, the market is betting the Fed will just sit on its hands today. But with inflation creeping up and the economy looking a little shaky, you have to wonder, is this pause just the calm before a much, much bigger storm? All right, just a quick disclaimer before we go. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are all listed for you in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. And of course, this video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.